Good evening, everybody. Andy here with Trading Adventures, and going to take a quick stroll through the markets today and check on the price action, see how things are developing. When we left the weekly charts analysis on Saturday, we looked at and considered what's the next sequence we need to see to tell us that the market is gathering itself and getting on firmer ground, and that was a continuation of a sequence of higher highs and higher lows. This is where we left on Friday. This was yesterday's open. And so a little bit of maybe a relevant low there on the dip down on Monday morning, but it's a little more pronounced over here on the Qs. And we certainly went back and made a higher high. It's not higher than these highs, but it's higher than these. And so we're seeing development here. And now we've got a little bit of a sell-off this afternoon, and we'll be looking for this to make a higher low. And the key reference points on SPY here will be the now rising 5-day moving average. And this green line is the month-to-date anchored VWAP. The pink line here is the year-to-date anchored VWAP. So all of those same reference points exist with the Qs, except the 5-day is still declining. The month-to-date anchor is right here under today's closing price. And we still have this trend line, which we'll look at it on a daily chart here in a moment, that has provided a little resistance here. So the Qs will still have some work to do. Dow 30 doesn't care. It's just making new highs and continuing along, although it did moderate a little bit today after the very strong gap and go open. IWM also paring back the gains slightly, but no real concern there yet. So let's go to our daily charts now and see SPY, once again, back to this Fibonacci extension level that has been resistance or an area of interest for quite a while now. Back since early January is when we first touched that level. And we've had pullbacks on each subsequent attempt to get above. We're back over it today, and the market pulled back a little bit. It's above a mostly flat 8 and 21-day moving average here, and doing just fine with RSI over the 50% level. Volume was a little light, but no concern there. Qs, here's that trend line on the daily chart, and we should probably call it more of a trend area if we want to draw it in here, something like this, because you can see it didn't respect the levels perfectly back on January the 20th. So it's something to watch. Price got briefly into this level, briefly over the declining 8-day moving average, and then sold off a bit. So we've got the low, we've got a little bit of advancement here, and we need to see how this develops. DIA, this is a potential evening star or shooting star candle here on the Dow today. Went way up and came back down and actually closed a little below the open. No major concern, but maybe we see a little moderation after it got so extended here over the last 3 days. A little bit of a retest of this breakout area as the 8-day rises would not be a surprise. And the small caps, IWM, similar action here. Just a little bit of a break after a solid 3-day bounce. It's above the 21 and the 8-day. The 8-day needs to get back over the 21-day. But RSI is healthy. Volume's been a little light across the board. No major concerns. So that's what's going on in the four major indices. Bitcoin finding resistance for 3 days in a row here at a declining 8-day moving average, which is not a surprise. This is a downtrend. Bitcoin is weak. It's had massive selling pressure. It did touch the $60,001 level here on the Coinbase quote and got a DeMark 9 buy indicator, which was good for a bounce up to about $10,000 or so. But it's finding some supply and some resistance here and looks to be leaking lower. If it gets above this level in the 8-day, which is, call it 70,500, there is an anchored VWAP from this test of the 50-day average up here. So that would be the next level of interest to watch on Bitcoin if it can even get up that high. That's around 73,500 on, or excuse me, right around 73,000 there on Bitcoin. The dollar also found resistance. It got above the 8-day, right into the 21-day, and reversed hard over the last 2 days. And bonds flipping the script here. Bonds looked like they were leaking lower. We noticed the weekly chart. It looked a little susceptible, but a little bit of recovery late in the week. And now they have, in 2 days, gotten back up to the top of the Bollinger Bands and testing this level, which they've probed a few times recently. So bonds are trying to shape up there. Now, some of the other things we looked at more beneath the surface in the weekly charts. Look at the equal weight S&P. We're using the symbol RSP for this. And steady new highs, still climbing, very strong there on the equal weight index. The equal weight NASDAQ 100 is still continuing to struggle. If we consider those relative to each other, we can see this is the SPY over the RSP. So if it's moving down, it's moving in favor of RSP. Just another view showing that the equal weight index is stronger than the capitalization weighted index, which you will recall is made up about 35% of the Mag 7 names. Here is the equal weight NASDAQ relative to the capitalization weighted NASDAQ. Once again, strong move. Now what looks like a bullish consolidation pattern here as the 8-day moving average catches up. So no indication that that relationship is going to change yet. It is a little extended. RSI is a little overbought, but this is firmly in an uptrend here, and the probability rests with a move higher on the QQQ versus QQEW. Looking at mags, since we mentioned them, they got a bounce from this area that we were watching, and that's a start, but it's certainly no trend change here. Like we've seen in the Qs, like we've seen in a couple of other things, we still have, this is an anchor off of the August 1 lows right here at 64.52. We've got the 8-day declining overhead, and so we can reasonably expect some supply and some resistance here on the Mag 7 names as they move up into this area, if they move up to this area. Software was incredibly extended to the downside, and it got a little bit of a relief bounce here today. This is a potential reversal candle right at the declining 8-day moving average. And so they are still far from out of the woods yet on the software names. And before we look briefly at some of the Mag 7 names individually, consider the areas of the market that have been going pretty well. Materials, XLB, very strong uptrend there and a breakout. This chart is very messy, but this horizontal line here, let me just get these off of here. This horizontal line is the breakout that mattered. As it came up, it broke through that line, rose, retested, and a very strong uptrend here in the materials sector. And then one more name we've been focused on a lot is the consumer staples. Just an incredible move here out of XLP, the staples sector, and it rose sharply, consolidated a bit, rose again. Now it's consolidating again. And RSI is a little hot up here, reaching 70, 80, 81 and a half there. It's moderated a bit now, and so we'll see. It looks like maybe it needs some rest. This is almost a measured move from, if you take this, the move from here to here, and then add that to from this subsequent move here, then it basically reached the measured move target there and is coming back a bit now. So at this point, maybe the biggest part of the run in staples is over and it comes back down into the closer to the mid 80s, or maybe even a test the 21-day. Anything can happen, but that is a possibility to look for there on the staples. And now back to quickly through the individual Mag 7 names. It's still a mixed bag in there. Apple is trying to recover and improve, and it's back over all the key moving averages and rounding over a little bit there. So it's doing better, and now we see, can it gather itself and make a run at recent highs? Amazon Still struggling from the earnings report and staying inside, mostly inside the range of the post earnings day action there. Google has been the strongest name, and even it sold off a bit on earnings. It's holding up fairly well, but once again, it remains inside the range that was made on the day after earnings. It had a nice pop on earnings, and now it's come all the way back down into this chop area. Look at how many times it's been stuck around the 660 to 680 range, and it's there once again with a declining 8-day and a slightly rising 21 and 50-day. So Meta is still stuck for now. Microsoft looks very much like the software sector, which makes sense. And it's almost the same chart. It didn't get quite as deeply oversold down in this area, but it is bouncing and moderating a bit here today. And NVIDIA with a quick excursion down into this level, which has been previous support with a 200-day rising underneath. We noticed that last week, and it's right back in the chop range. Notice here, I was pointing this out to Alpha Trends subscribers earlier today. What we really need to see for NVIDIA is a move that gets it above this gray shaded area and shows the ability to stay there. It has not been able to do that so far. And part of the problem is we've got a flat 8, 21, and 50-day moving average here for several months now. There's just no trend. Every trip outside of this range has quickly reverted back toward the center line, and there's just no resolution yet for NVIDIA. This is a strong 3-day move. It's got earnings coming in a couple of weeks. Maybe it can get above and stay. That's what I'll be watching for to possibly be an indicator that NVIDIA is ready for another trip higher, is a move over this 191, 192, 193 area that can stay there while the moving averages start to slope up. Then and only then can we see a move back towards the recent highs or the all-time highs, 211, 212 area. And now, does that happen as anticipation and a run up into the print here in 2 weeks? It's possible, but for now, we're not seeing evidence that it can stay above that level. Finally, we'll look at Tesla. More of the same. It's a nice bounce. It also had a level of price history back in this area with the 200-day moving average catching up, and so that was good for a bit of a bounce, but it's not out of the woods yet. It's the 8-day is rising, but the 21-day is still coming down. That has been resistance on every trip since late January, and we need to see that change and start to move higher before we can look for too much out of Tesla. So there's the market in a nutshell. It's still just a mixed bag. The large cap indices, PY and DIA, are doing just fine, and they look like everything's fine. It's hard to be too bearish when the S&P is close to making new all-time highs and the Dow's already at new all-time highs, but we do have some reason for concern beneath the surface. It's just a cautionary item right now. It's not signaling doom and gloom, but this is the rotation that we've been seeing and monitoring, and where does it go next? That will be the question. And like every chart, what we want to see again is that sequence shifting to a series of higher lows and higher highs. So that's the market update for today. I hope you find that helpful. We'll see what happens the rest of the week.